Hello everyone, it's Tracy here. In today's video, I want to go through Shopify. Now Shopify has dropped massively from all-time highs from a huge market cap of 190 billion to now, well, as low as 50 billion now. Of course, that dates today's video because the market cap always fluctuates. But in today's video, I really want to go through, can Shopify recover from this violent fall? Is there a buying opportunity right now? So in today's video, I want to cover, is Shopify undervalued or overvalued right now? Or do a quick analysis using my step-by-step checklist that I use with all my students that go through my Financial Freedom Accelerator program. So I'm going to share that same process with you in today's video. So if you are an aspiring investor or you're a Canadian stock investor and you always want to learn more and build up your financial knowledge so you can do your own due diligence, then you definitely want to check out today's video. Hey everyone, it's Tracy here. Just in case you don't know me, I'm a former engineer turned full-time investor in Canada, but mainly I'm a mother of twins. Now, if you want to learn how to create multiple streams of income, build your wealth, and ultimately live your best life, then you definitely want to check out my channel and hit the subscribe button and that bell notification button so you get the latest and greatest videos coming to you every single week. So let's get back with the video. Now, when I was starting out investing in stocks, I remember I started investing just after a tech bubble crash. And at that time, every tech stock took a huge haircut. Now, it's so natural for us to look at a stock like Shopify and say, wow, it's crashed and burned from all-time highs, taking a huge haircut of like 80%. How much further could it really drop? So if you're a huge bargain investor, you're like, oh, Shopify can seem really, really enticing. Now, I took some gambles back in the day after the tech bubble crash back in like 2000-ish, and I looked at a stock called Nortel, which is the beloved tech company in Canada. And it had gone up like, I think at that time, $70 per share, all the way down to $7 per share, which is a humongous haircut. And I thought there's no way it could drop even further because it's already at all-time lows. And because a lot of my friends worked at Nortel and they had positive things to say about the company and the proprietary research and technology that they had, and also that Yahoo Finance had pretty good price targets, future projections about the company. And because I'm such a big bargain hunter, I was like, hey, it's dropped from all-time highs to $7 per share. I was like, it looked like a massive bargain. So that was the extent of my research. Now I'm telling you this story because I feel like a lot of investors are probably looking at Shopify with the same lens. And if the extent of your research is just looking at a stock chart and saying, hey, it's dropped like 80%, you know some friends that work at Shopify, you've heard some great things about Toby, or maybe you look at Yahoo Finance and look at the price targets and it looks like really enticing, I'm going to say that pretty close to gambling. So I want to help you all out. I want to help you go through a step-by-step framework. This is my own step-by-step checklist that I use with all my students who are part of my investing programs. And I want to share it with you today so that you can make your own financial decisions and do your own due diligence and say, is it a buy right now? Now, whenever I look at a growth company like Shopify, I always think, where's it at in terms of its S-curve? Now, just in case you don't know what the S-curve is, the S-curve is where it's at in its business cycle in terms of business performance. See, earlier stages in the S-curve, it's going through massive growth. It's reinvesting a lot of its cash flow and profits back into the company. So during that time, a lot of companies on that stage are actually not profitable. They're just making money and they're reinvesting the money back in the company. And as they continuously grow during mid-stage growth, that's when they start scaling their products. And maybe they're starting to become more profitable and they're at their turning point. And then all of a sudden at the late stages of growth, then they're like becoming a super mature company like the Googles, like the Microsofts that's been around for decades and decades and are super proven business models. So when I look at Shopify, I think of Shopify as more in the early stages of growth, not quite in the obviously initial public offering when there was no proven business model. Now it's like it's at a point where it can massively scale, similar to Tesla. And this is going to become super important later on when I talk about the risks versus rewards, because the earlier you are in the S-curve, the higher reward that you expect because you are taking a higher risk because it's less proven. So going through my due diligence step-by-step checklist, the first thing I ask, is it part of the TSX 60 or the S&P 500? Because it's trying to say the biggest companies should belong in these big indices. And of course, Shopify is a pretty big company. In fact, one of the biggest companies in Canada. So, of course, it is in TSX 60, which is like, yay, check, yes. Number 2, is this an easy business model that you can understand? My investing philosophy is invest in companies that you are more knowledgeable about, because you're more likely to stay invested, especially if it's a high quality company with great fundamentals and you bought it at a low price versus a no-name company up north mining for gold and all of a sudden has some bad news. You might get scared and just decide to sell it, versus a company that you can really understand its business model, then you know how they make money and you're more likely to stay invested during bad times. So I would say Shopify is a fairly easy business model because we all see it. Like if we're buying things, probably noticing, hey, Shopify powers the point of sale, it powers the e-commerce platform. So it's a great way, it's a really easy business model to understand. You know how they make money, which is off transactions and subscription models. Number 3, does it have great leadership / management? Now, Toby, I would say, is a pretty amazing founder. I mean, he launched it from a very small company to one of the biggest companies in Canada. So I would say under the leadership of Toby is what made Shopify. So I would say that checks. The next one is, does it have a big vision, a big mission, or solving a significant hard problem? I would say because Shopify has a lot of competitors and it's not exactly like life-changing, I wouldn't say it's solving a hard problem. So I'm a little bit mixed on this one because there's a lot of competition in this space, but what they do awesomely is Shopify makes it super easy peasy to use to build your websites, to, well, sell products. But there is a lot of competition and I don't really see this as a completely disruptive company. Next one is, does it have multiple streams of income? Now this is important because we don't want a one-trick pony. We don't want a company like GoPro that just sells cameras and you know what kind of happened to GoPro, ain't that popular anymore, versus you want a company that can actually survive and thrive over decades and decades. Now, because Shopify is trying to create multiple streams of income, according to Hypercharts, you can see that it has at least 2 current streams of income, and it's looking to actually build another source of income, competing with Amazon with their fulfillment center. So this is something I would say it definitely has multiple streams of income. The next one is, it creating new markets or killing old markets? Now, this is where Shopify really shines. I feel like they are killing an old market where it was quite clunky to build a website, quite clunky to actually add products to it, and then check out, pay with credit card. They're completely making that a seamless process, not only for the customers, but for business as well. Next one, does this company have 10-year financials? The reason why I look for 10 years of financials is to show that it has a proven record, proven performance. But because Shopify only went initial public offering in 2015, and any financial data before that isn't audited, I'm not quite confident about all their financials. So I'd say that this is where it doesn't pass. Now, the next one, has the company in the last 3 to 5 years grown 10% year over year at bare minimum? And of course, Shopify shines here because it's actually grown in double digits for many, many years, sometimes 50 to 60% year over year revenue growth. Now, the next one I look for is 3 to 5 years of earning growth, or it's profitable. Now, because Shopify is fairly in the beginning stages of profitability, it was on a great track record where the last 3 to 5 years, it was becoming profitable, especially in 2020 and 2021. But recently, in 2022, it became negative profits again. And so this is where it's not doing well, which is a no. Next one is its earnings growing faster than its revenue? Now, remember earnings, just in case you don't know what earnings means, it's basically when you get revenue, it's like your salary, and then you have to pay your expenses, you have to pay your mortgage, you have to pay for food, you have to pay your taxes. Well, it's the same thing with a company, same thing. So their revenue is like your salary. Their earnings is like, well, your net income, okay? So in the end, unfortunately, Shopify hasn't been growing their earnings faster than they've been growing their revenue because, well, it's been spending a lot of money. So this is where it's a no. Hey everyone, big announcement here. If you want to learn things like, hey, do your own due diligence using a step-by-step checklist, just like I did in today's video, but you want to do more, learn to create multiple streams of income using stocks so that you can, well, obviously design and live your best life. Well, I'm opening my next cohort, okay? It is going to be launching probably October. So if you want to be on the waiting list, get their early bird pricing, then you definitely want to sign up in the waiting list below. This is such an amazing program. This is a program that I wish I had when I was starting out, which is why I built it for all you Canadian investors. Now, I've had great positive feedback. A lot of lives have been transformed. And if you want to see student results, student testimonials, well, you could also check out in the links below. Now, the next thing I look for is last 3 to 5 years growing cash flow, either stable or it's growing, so that I know it's cash rich, because it's always good to have a company that's cash rich so it could survive turbulent times like this year. So with Shopify's case, in the last couple years, it has been very cash flow positive. But in 2022, unfortunately, it's been trending down and it looks like it's completely decelerating. So I would say that I'm not getting the warm, fuzzy feeling where I see a proven track record where it's cash flow. It is continuously going up on a clear uptrend. This year has been very difficult for Shopify. Now, the next thing I look for is, well, very little debt, or it's okay to have debt as long as it's using responsibly and has at least 3 years of cash to easily pay out its debt if it can. So then it can survive like turbulent times like this year. And in Shopify's case, well, Shopify has massive cash reserves relative to the amount of debt it has. So this is an easy yes for Shopify. Now, the next thing I look for is this forward PE is less than this trailing 12 months PE. Basically, I just want to know that if I were to buy Shopify stock today, relative to how much it's earning, it's actually cheaper than it was in the last 12 months. That's all it means. So forward PE that's lower than the last 12 months PE is always a positive sign. But the problem with Shopify is that it's not expected to be profitable in the upcoming quarters. That's why it's NA right now. So I'm not getting the warm, fuzzy feeling that in the future that Shopify is going to remain profitable. So that means its forward PE, well, it's actually going to be lower than the last 12 months, trailing 12 months PE, which is not a good thing, which is a no. Now, the next thing I look for is this forward PE, well, less than historical PEs. That means that relative to what's earning, it's actually trading a lot cheaper than, say, relative to what is earning in the past. But because Shopify is actually not profitable anymore, well, we can't use that metric because, well, it's actually obviously not profitable. That means actually relative to what's earning, it's actually trading quite expensive relative to its past PE ratios. So that's a no. So the next thing I look for is those ROIC is at least 10% year over year. ROIC means management effectiveness, aka it's just saying, hey, is management using its money effectively when it's reinvesting its funds? Now, unfortunately, with Shopify, its ROIC is actually less. Okay, it's less than 10%. In fact, it's been negative historically, so it's a big fat no here. So what it means is that I don't think that management is using the funds, the companies very effectively. It's not giving a very good return on investment with the amount of money that's reinvested in the company. Next thing I look for is it's decreasing debt over time, because, like when you have high interest rates and you have a lot of debt, well, that's always a big problem for a company, especially if its profits and its cash flow is quite lumpy. It means that, hey, it could have trouble surviving turbulent times like this year. Well, the good news is Shopify has very little debt relative to the amount of cash reserves it has. So in terms of this is like an amazing yes for Shopify. Now, the last thing I look for is its profit margins are growing over time. Now, unfortunately, with Shopify, it was profitable in 2020 and 2021, but then in 2022, it struggled. It seems like it made some maybe bad investment, high expenses, and unfortunately, it's no longer profitable. So in terms of profit margins, it's actually dropped significantly. And I would say that looking at projections, looking at future roadmap, like looking at investor relations, it's not quite clear to me if there's a clear roadmap to profitability. Like I'm looking for a 5-year plan, like, hey, we're going to turn profitable in like next year because we're going to grow double digits. We're going to do this, we're going to do this, and we're going to turn the company around. I'm not getting that. I don't see that anywhere. At least I can't find that in the investor relations reports. So I'm not getting the warm, fuzzy feeling that its profit margins are going to improve over time, especially if its revenue is actually expected to even slow down over time. So unless it dramatically cuts expenses like it has, like it just done great steps towards it, like laying off 10% of its workforce. It's becoming a completely remote company, which means less expenses, less rent. and it continues doing things like that to trim the fat, then maybe there could be a turning point in the near future, but it's just not super clear to me right now. So for me, as you can see, using my step-by-step checklist, I'm seeing like lots of yeses, but when it comes to its financials, well, a lot of them are big fat no's. So this is not an ideal environment for Shopify, especially in a high inflationary environment. It's really killed growth stocks like Shopify. When I'm looking in terms of its risk versus reward ratio, getting back to the S curve and seeing that Shopify is in the early stages of growth, I should see a clear roadmap to profitability into massive scale. And I should also see that if I put in, say, $1, it should return at least $3 within a span of 5 years. And I'm not quite seeing that. Like, I don't know if its market cap is going to double or triple over the next 5 years because it's actually slowing down in revenue, slowing down in earnings. And I'm not quite seeing a clear roadmap to get to that back in the golden days of 2020 and 2021. Now, one thing I'm looking forward to, and I'm hoping this happens, is that CEO Toby turns it around, says, hey, here's my roadmap to profitability. I'm going to trim expenses. I'm going to grow my revenue this way. I'm going to do X, Y, and Z. I'm going to scale across the world. And it's clearly shown how they can turn it around, become profitable, then for sure its market cap can 2x, 3x, 4x. It could become one of the beloved tech companies in Canada. But right now, I'm just not getting the warm, fuzzy feelings. I'm seeing a lot of short-term pain. Now, that's not saying Shopify is on the chopping block from my watch list forever. In fact, Shopify has been on my watch list for a very long time. I'm just not getting the warm, fuzzy feelings about it. The financials are not supporting it. But if I see a 5-year plan, I see that Toby has a turnaround plan. And one of the great things about Shopify is he's a founder of the company and he's staying invested because he's got a great equity share of the company. And if he has a clear roadmap to turn the company around, to have 4 consecutive profits, to massively scale around the world, and it's a very clear roadmap and a product roadmap is getting me excited, then I will definitely revisit Shopify, even if it's trading at higher multiples, because at least it's proven itself. And I'm looking for a relatively low risk and high reward investment. And right now, Shopify is just not there for me right now, but maybe in the future. And of course, you may not be a cautious investor. You may say, hey, I'm all for Shopify. You're in it for 10 years. You see something that I don't see. And that's why I'm sharing this video so that you can take some of the steps that I've done, do your own due diligence, and formulate your own conclusion, because this video is for entertainment purposes only. Hey everyone, big announcement here. If you want to learn things like, hey, do your own due diligence using a step-by-step checklist, just like I did in today's video, but you want to do more, learn to create multiple streams of income using stocks so that you can, well, obviously design and live your best life. Well, I'm opening my next cohort. Okay, it is going to be launching probably October. So if you want to be on the waiting list, get the early bird pricing, then you definitely want to sign up in the waiting list below. This is such an amazing program. This is a program that I wish I had when I was starting out, which is why I built it for all you Canadian investors. Now, I've had great positive feedback. A lot of lives have been transformed. And if you want to see student results, student testimonials, well, you could also check out in the links below. Anyways, I hope to see you in the waiting list. And if you're not ready, that's okay. I'll see you in the next video. Bye.